An unusual time. It's a special edition of Business Incorporated. The program airs earlier than usual because the Central Bank of Nigeria is set to brief on the decision of the monetary policy meeting at 11 a.m., according to information made available to the media. So it's decision day in Nigeria, and we will find out if the surging inflation and continuous threats from the war in Ukraine will change the stance of members of the MPC. You're welcome. I'm Imi John Mekwa. Quite an unusual Business Incorporated today, coming to you much earlier than usual, and the package very different. And the impact of the Russia invasion into Ukraine and ongoing war remains the hottest issue on the economic space 3 months after it started. Apart from the disruption of grains and other commodities supply that come from Ukraine and Russia, the economic sanctions imposed on Russia and the consequences have hit practically all countries, including Nigeria. It's led to food shortages, inflation surging faster than before the war, and now some countries such as the United Kingdom and the United States are talking about recession much earlier than expected. Not surprising, since the disruption in the oil and gas supply has led to an escalation of energy prices and even rationing in some countries like Finland, Bulgaria, Poland, which Russia has cut supply from. Well, we cannot run away from these issues in Nigeria, and that's why the Monetary Committee meeting holds for the 3rd time this year, and these will be major considerations. But before we get to the MPC, let's try to get in other elements of the program as much as possible before we head to the CBN headquarters. We start with Berlin and see what's going on in Europe. Well, on currency market, the euro has rallied after the head of European Central Bank signaled interest rate hikes in the Eurozone would be around the corner. Well, we have Chris Colbert now joining us to give us updates on that. Hi, Chris. Good morning. Well, was it just the comment of Christine Lagarde that brought about this drive in the currency movement?
European Central Bank President Christine Lagarde openly admitted for the first time what investors had been betting on for a while. Negative interest rates, a Eurozone feature for 8 years, will most likely be gone by the end of the summer. Now, in a blog post on the ECB's website, Ms. Lagarde said she expects asset purchases that support the economy would end, quote, very early in the 3rd quarter, which would allow a rate lift at the ECB Governing Council's meeting in July. The euro jumped more than 1% amid this announcement and is holding on to these gains. Today, the single currency has risen more than 3% since hitting a multi-year low 10 days ago. With Eurozone inflation at a record high and broadening, Ms. Lagarde's comments accelerate a policy turnaround that has seen her go from all but ruling out a rate hike this year to now penciling in several. Headline inflation in the Eurozone hit an all-time high of 7.4% in April, with even measures that strip out volatile food and energy prices far exceeding the ECB's target of around 2% inflation.
And talking about that, how are the stocks faring at this time?
There have been other factors as well, although Ms. Lagarde's comments have been the most crucial ones. But a survey showed that German business morale unexpectedly rose in May, partially recovering from a slump at the start of the war in Ukraine. That's according to a leading economic research institute here in Berlin, the IFO Institute, saying its closely watched index rose this month compared to April, whereas analysts had been expecting a downturn. The index is based on a survey of the current business and future expectations of about 9,000 companies here in Germany. So this surprise increase in morale helped push German financial markets. U.S. stocks, which have spent much of this year in the red, saw a boost from the dollar sinking against the euro and from President Biden, who hinted a relief in trade tariffs. Now, during a visit to Japan, Mr. Biden said he was considering removing some of the punitive import duties and enacted by former President Donald Trump on China. President Biden also announcing that 13 countries had joined a new U.S.-led Asia-Pacific trade initiative.
And so what else is the market telling us? What are the reactions from the markets?
Well, it looks like yesterday's recovery is only short-lived. European stocks declined at the start of Tuesday's trading session. The DAX in Frankfurt shedding around 1%, China shares dropping around 2% and weighing on Asian markets. U.S. futures also declining sharply. There are more grim corporate results evidencing the hit from surging inflation and slowing growth. Social media company Snap cut its quarterly forecast, triggering an aftermarket rout in its shares. Add to that the somber mood among high-profile decision makers. The global economic outlook has darkened. Political and business leaders gathering for the World Economic Forum warned the main problem, at least in the short run, is inflation without any doubt, French Central Bank Governor François Villeroy said in Davos.
All right, Chris, thank you so much for that update. I will certainly follow up on market reactions and other stories tomorrow. So from Germany, we go to Africa. It's day 2 of the Africa Development Bank's meetings holding in Accra, Ghana, with the theme Achieving Climate Resilience and a Just Energy Transition for Africa. However, it seems that the Ukraine war has directed major part of the conversation to dealing with food shortages. At least that's what we have heard from our correspondent, who is there, Teniola Shubawale. She sent in a report yesterday and joins us live now to tell us what's going on. Hi, Teniola. Good morning.
Hi, Amy. Good morning.
Yeah, so we saw that report you sent in yesterday about the confidence that Africa should be able to produce its food. But just before we go there, this is the first in-person meeting since the pandemic. How's the turnout? How's the behavior? Do we have face masks? Do we have hand washing? You know, how is it there?
Of course, it's the first physical meeting after 2 years, so there's a lot of measures in place. But the turnout is quite high. You have governors of the bank, participants, so the turnout is quite high, but those measures are in place. You have to be fully vaccinated to take part in the event. There's also daily COVID tests, and of course, if it's negative, you can't take part. There's also compulsory wearing of face masks. So the turnout is high. It's not as it was pre-pandemic level, but it is high.
All right, great. So from the reports you sent in yesterday, we saw Dr. Adesina there very confident that Africa should be able to feed himself, and it's not a thing of pride for anyone to beg for food. So give us an overview. We know that there's the AfDB Food Fund, which we discussed yesterday with one of the officials of AfDB. What are the other conversations around this food security, especially in the face of the war?
So the theme this year is achieving climate resilience and a just energy transition for Africa. And the conversations really are just focused on, apart from the disruptions to food production by the war in Ukraine, also the devastation caused by climate change. And as you mentioned, the AfDB is quite confident that Africa will not beg for food. Dr. Akinwumi Adesina was very confident that Africa shouldn't have to beg for food, that Africa will produce its own food, and then that comes in the 1.5 billion emergency food production facility. So the fund is aimed to help in 20 million African farmers produce an extra 38 million metric tons of food to address fears of starvation and food insecurity on the continent. And let me just read you what this will include. So this would include 11 million tons of wheat, 18 million tons of maize, 6 million tons of rice, and 2.5 million tons of soybeans. So the plan really builds on the AfDB's technologies for African agricultural transformation, which is basically using technology energy to boost the sector on the continent. He also spoke yesterday about Nigeria and listed some of the support the bank is giving to the Nigerian government. And most notably, he spoke about the e-wallet system that he introduced while he was the country's Minister of Agriculture. He says that this is needed to ensure effective distribution of fertilizers and seeds to Nigeria's smallholder farmers. So, you know, it's all about ensuring that even though all the challenges that Africa has faced from the COVID-19 pandemic are now compounded by the war in Ukraine, it's ensuring that African countries do not go hungry and African countries are able to feed people, basically, and people don't die of starvation.
And talking about Nigeria, he did emphasize that he's going to work closely with the Nigerian government, and he mentioned $30 million. Do we have an idea, you know, maybe how it's going to work, who he's going to be working with, ministries, private sector? Did he mention anything like that?
So we'll be getting more of an idea of those plans. Today is actually the opening ceremony. So yesterday was just an overview of what to expect during the week. So we're getting more of those plans, and I'm sure as we get more details on that, we'll be bringing that to you. But yeah, so we'll be getting more on that and we're bringing it to you.
All right, sure. And then apart from the food shortage, food security, and then, you know, of course, there's the issue of the energy transition. What else are people talking about there? It's not just about the Ukraine war and food, I know.
Yeah, it's really not about the Ukraine war. It's about climate, really. As I said, the theme this year is focused on climate, ensuring that Africa gets the funding it urgently needs for a just transition of energy. And ahead of the COP27 in Egypt later this year, there will be meetings of governors of the bank this week, presidential dialogues and knowledge events just to discuss how Africa can get the funding it needs and the funding that it's been promised by the Western nation. As we know, Africa is the least contributor to the global climate crisis, but already it's bearing the most of their consequences, what we've seen in Mozambique and mostly recently in South Africa. So the discussions mostly are now focused on ensuring that ahead of the COP27, Africa has a plan to shield and to avert the devastation caused by the climate crisis on the continent.
All right, Teniola, you do have a lot to cover there because we're going to stay on you until the meeting ends. I think by Thursday you've heard
details, definitely.
Sure. So you take care of yourself and stay safe. We'll talk to you again tomorrow.
All right, Annie. Thank you.
So something else that Teniola sent yesterday was what the AfDB president, Dr. Akinwumi, has been saying at that conversation we're having about food and the confidence that he has that Africa can indeed provide for itself.
Africa's real GDP growth rebounded to 6.9% in 2022. But just when we thought everything was looking up, then Russia invaded Ukraine. Russia's war in Ukraine has led to new challenges on top of already existing challenges for us. It's led to high energy prices. It's led to high fertilizer prices that have actually increased by more than 300%. It has disrupted food imports, especially for African countries. 30 million metric tons of food, of wheat and of maize will no longer be coming from Russia or from Ukraine. That's imported by Africa. That's a lot of food. So Africa right now faces a looming food crisis as a result of this Russian war in Ukraine. Russia is far from here. Ukraine is far from here. The impacts of it are right here. When we had COVID-19, we didn't have the technology, we didn't have the vaccines, we didn't have the personal protective equipment, We didn't have anything but for agriculture, for food. We are fully ready. Africa will not have a food crisis. Africa does not need bowls in hand. Africa needs seeds in the ground. Africa should not and will not be begging for food. Africa will produce its own food, for there is no dignity in begging for food.
No dignity in begging for food, and we do hope that Africa can live up to that expectation, you know, and produce for itself. We do have the potentials, so let's make use of it. It's a special edition of Business Incorporated, where we are going to the CBN headquarters for the decision of the MPC for the month of May. While we await that decision, we'll bring you other elements of the program. We'll take a break now. When we come back, we'll head to London, and then we'll give you an overview of some decisions by other African countries when it comes to interest rate, inflation, and other parameters. Do stay with us. This is a special edition of Business Incorporated here on Channels Television. You're welcome back. It's a special edition of Business Incorporated here on Channels Television. And as we told you, awaiting the decision of the announcement of the decision of the MPC. They've been meeting since yesterday, and then we do await them. The central bank had given out information to the media to say that instead of the normal 2 o'clock, which is a normal MPC time, it will be at 11 o'clock. So we're here awaiting the decision of the MPC to be announced. Our colleagues are right there, the crew right there in Abuja, the headquarters of the Central Bank of Nigeria. And we do know that any moment from now, we do expect that they would come on. And well, before we head to London, let's give you a summary of other decisions by other major economies in Africa, starting with South Africa. Just for the record, yesterday we did have Ghana, but we start from South Africa. South Africa, at the MPC meeting we had last week, we saw that the South African Reserve Bank raised its benchmark repo rate by 25 basis points to 4.25%. And this was widely expected. We know a lot of countries are raising rates at this time. In May, economic parameters were not better, so South Africa hiked rates, and this time it was by 50 basis points to 4.75%, and that's the biggest since January 2016. South Africa's inflation inched up to 5.9% in March from February's 5.7%. Consequently, annual average inflation rose to 5.9% in March from 5.7% in February, while core inflation rose to 3.8% in March from February 3.5%. So there you have it, South Africa following the trend of the world. Now let's go to Ghana. Yesterday, the Ghana Central Bank met. Yesterday, the 23rd of May, the Bank of Ghana raised its main interest rate by 200 basis points to 19%. And the reason? To curb inflationary pressures and promote macroeconomic stability. This is the third time since November that the bank has told this line of action. In March, it raised rates to a 3-year high of 17%. And of course, inflation was behind that. And of course, it's worsened by Russia-Ukraine war. By May, the country's inflation had hit 23.6%, driven largely by surging food and transport prices. Let's go to Kenya now. Inflation surged more than anticipated in April, stoked by higher prices of basic food and food items such as cooking oil. Consumer prices rose 6.5% from a year-on-year, compared with 5.6% in March the year before. The Central Bank of Kenya's MPC members they are set to meet on the 30th of May, and they're expected to retain interest rate at 7%. And they're expected to do this in order to support the East African country as they go into election season, just like Nigeria. We see there also in that election mood. And then in Angola, March, the National Bank of Angola kept its benchmark policy rate at 20% during its regular meeting. The decision was aimed at maintaining prudence and stability in the conduct of monetary policy as risks and uncertainties associated with internal and external economic context prevails. The domestic inflation slowing down and lower food prices. Angola's March inflation stood at 28.56%. That was from 27.28% in February, and is expected to record its lowest rate of inflation in 18 months when the data for April is released. Angola's meeting is slated for the 31st of this month, where the meeting is expected to retain its rate at 20%. And this because the expectation is that inflation rate in the country has been slowing in recent years, in recent months, and will continue to slow. And then let's do Nigeria now. That's our focus, main focus for today. The Central Bank of Nigeria has kept its benchmark interest rate steady at 6-year low of 11.5% in March. It's the interest rate that has been stable since September 2020, when the CBN reduced that monetary policy from 12.5%. So it's been at 11.5%. Now, since September 2020. For April, Nigeria's inflation jumped by 90 basis points to 16.82%, and that's the highest in 8 months. It went from 15.92% in March. In spite of this, the Monetary Policy Committee members, well, is expected. A lot of analysts, I think it's kind of divided, but there are analysts who expect it to be retained at 11.5%. And this, if they do, this will make it the 10th consecutive meeting when members have voted to leave the rate unchanged. All right, just before we delve into that conversation with our guest here in the studio, let's just do a quick run to our London studio with Juliana. Hi, Juliana. I hope you've been able to catch your breath. Just a couple of minutes ago, you were with Laddie. Now you are here. It's a special day, Julie. So UK government has borrowed £18.6 billion as at April. And last year's borrowings was revised. Any conversations about more borrowings to help the high cost of living?
Good morning, Inni. Yes, there are conversations around this. The government has actually been helped. They borrowed much less than they did in April last year, coming in at just over £18 billion. That, of course, was helped by tax receipts. I'm sure you'll remember that national insurance rose last month, which gave the government an extra £1.5 billion in their coffers. Plus, of course, this time, this year, they're not spending as much as they were on COVID-19 support last year. But, of course, £18 billion is still a lot of money to borrow on the month. I think this is the fourth highest amount on record. The Chancellor has spoken since the release, saying that he looks at these figures and realises that there has to be a responsible approach to borrowing. And he's doubling down on that sentiment because, of course, charities, opposition party members are urging the government to do more, particularly on a windfall tax, which has been coming and going. Will they, won't they? It does appear that they will. The Chancellor is currently mulling over a windfall tax of energy giants who have managed to profit at a time where families are struggling to pay their bills. But we're just going to have to wait and see what the tax receipts will be for the month of May. But they're certainly declining. However, inflation is at an all-time high, which means it's costing the government more to pay back their debt.
Yeah, inflation is everywhere, Juliana. Inflation is everywhere. And as the MPC Nigeria admits, then, you know, it's a major conversation. But, Juliana, thank you so much for being able to switch over from Business Morning here. We'll talk to you again tomorrow. Enjoy the rest of your day.
Thanks.
It is a special edition of Business Incorporated, and it's because we await the decision of the MPC. The central bank has been meeting since yesterday, and it concludes its meeting today. We await the announcement of the meeting, and there are analysts who are saying that they do foresee retaining the parameters again. That will be the 10th time some people have asked if it's being retained, then why do we even have the meetings? But we'll talk about that and a whole lot more in just a couple of minutes. We do have our guest here in the studio. Abdul-Kudus Isiaka is an economist with ProShare, and he was able to meet up with that change in time. Thank you so much, Abdul-Kudus, for joining us this morning.
Thank you, Uni, for having me.
Good to have you. So even before we, what's your projection? Do you see the MPC retaining, or do you see the MPC joining other countries like Ghana, like South Africa? Do you see an increase in the interest rate?
Well, I must say that it's very difficult to read the minds of members of that committee. But if we go by the voting pattern at the last MPC committee meeting that came up in March, we saw 6 members actually vote for a hold, and we saw 2 members vote for a 25 basis point rise in the base rate, while 1 member actually voted for a 50 basis point rise. So if we look at that pattern, it kind of suggests a more dovish stance, or centrist stance, you may say. And so I think what would possibly change this time around is that we'll see a few, 1 or 2 more members vote for a hawkish position, but at the end of the day, the committee would likely hold policy parameters. I feel so.
Why? I mean, is it that our interest rate at 11.5 is high enough to take care of the inflationary pressures that we see?
Well, I wouldn't say that the interest rate is high enough, but I would say that we need to look more critically at the nature of inflationary worries we have. So, the complexion of the inflation we have is, one that is more relatable and more ascribable, so to say, to the supply side. So we have a lot more problems apart from money supply growth. So truly, money supply actually grew in the first quarter of 2022 considerably, from about 49 trillion naira to, that's broad money, from 49 trillion to about 52 trillion, the fastest quarterly growth in many quarters. So, it kind of gives those members of the committee who would want to argue for a hike in rates, it kind of gives them a good argument. But then again, the CBA and the Monetary Policy Committee has maintained that it has other heterodox, unconventional monetary policy instruments it could use to mop up excess liquidity. The fear is that we are seeing an inflation that is, largely chalked up to, energy costs, FX accessibility, or the lack of it, then issues around insecurity affecting food inflation. So I think these are the fundamental issues that we may really need to look at in the Nigerian case. Again, they may want to argue that, okay, the real GDP figures, 3.11%, kind of supports the argument that the economy is now sound enough to accommodate a contractionary stance.
All right, Abdul-Kudus, just hold your thoughts. We do have a lot of time to have this conversation, but for now, for the sake of the programming, we will close the Business Incorporated, and when we come back, we would focus more and dwell on the MPC. So do stay with us. We'll see you in just a minute. This is a special edition of Business Incorporated here in Channels Television.